Hello. Welcome to the Bogart Wealth webinar on long-term care and long-term care insurance. We hope this topic will be helpful for you, and we look forward to having further discussions with you. I do want to point out that I have our Q&A box open. So throughout the webinar, if you do have questions, please leave them there, and I'll try to be checking for that periodically through the webinar. My name is Nell Cordick. I'm a Senior Vice President with Bogart Wealth Financial Advisor, and I do hold my Certified Financial Planner designation. If you are not familiar with Bogart Wealth, just thought I would take a minute to tell you a little bit about us. We actually were founded as an RIA in 2016. We have 3 offices, our headquarters in McLean, Virginia, 2 other offices in Houston, one in Houston and one in the Woodlands. We actually work with about 1,400 clients presently. We have $3.1 billion assets under management, and we have about 50 employees in our firm. Want to do a full disclosure, we are not insurance brokers. I know this topic is on long-term care insurance. However, we are certified financial planners and are very familiar with insurance topics. The presentation is really designed to give you an overview about long-term care and long-term care insurance, but we do not actually sell or broker insurance. So our topic today, what we're going to be discussing is first, what is long-term care? What might be the chances that you would need long-term care? What are some of the costs associated with long-term care? What would be some of your funding sources? And then what does long-term care insurance ultimately do for you? So first, let's talk a little bit about the statistics about long-term care. Duration and level of long-term care varies widely. So the statistics that I'm showing on the screen are really average numbers that basically someone turning 65 today has almost a 70% chance of needing some type of long-term care in the future. Women typically need care longer. They average about 3.7 years versus men averaging about 2.2 years. And then 1/3 of today's 65-year-olds may never actually need any type of long-term care support, but 20% will need it for more than 5 years. As you would expect, the need for long-term care increases with age. For example, 40% of adults that are 85 or older will probably need long-term care. 13% that are will probably need a nursing home setting. Now, if someone is between the ages of 65 to 74, they would probably only about 8% would need long-term care, and only about 1% would be needing nursing care. Women are more likely than men to need long-term care. Typically, 75% of women versus 64% of men will receive long-term care in their lifetime. 55% of women versus 38% of men will receive paid long-term care in their lifetime. 34% of women, 24% of men will actually need nursing care, and 17% of women versus 8% of men will receive Medicaid-financed nursing home care. So I want to point out with these statistics, there is one important factor that is very hard to track. Women are traditionally the caregivers in the home, and therefore, I'm not sure that the full statistics on men is fully captured, because a lot of times the female spouse will actually take care of the man longer, to be honest, than the man will take care of the woman before putting them in a facility. Ongoing services and support is really the definition of long-term care. It's due to some type of chronic health condition or disability. Basically, to put it in plain English, it's really the patient's inability to handle the basic activities of daily living, or to require constant supervision due to some type of a cognitive impairment. Now, I do want to point out that for someone to be designated as as needing long-term care, they typically will need to have the doctor's assessment and approval for both cognitive impairment and daily living struggles in order to be deemed needing the long-term care. There are 3 levels of care: skilled, intermediate, and personal care. And that basically it can be provided in quite a number of different settings. So the activities of daily living, which are abbreviated ADLs, if you cannot do 2 of these 6, that would be a definition that you would need long-term care: bathing, eating, dressing, toileting, transferring, or continence. Now, the definition of cognitive impairment is really a condition that requires constant supervision to protect yourself or others from dangers to health and safety. Typically, most often, that really is going to be impacted with Alzheimer's disease, some type of brain injury, or a stroke. So where is long-term care given? These are a lot of different settings where long-term care can occur, and also, I would say, levels of support. So there are quite a number of adult day service centers that are in our local communities, and basically these centers are fairly inexpensive. They provide professional programs that for people that need some level of supervised care. They tend to be in a group setting, and sometimes the centers will also provide transportation, medication management, meals, etc. This is very common, especially when and a parent may be living with a child and the child is still working and needing to be active, but they need someone to be supervising their parent, but the parent doesn't need the level of care that a assisted living or nursing home would require, but they do need some level of supervision. The second level of care is really home health care, and this is when home health aides can come into the home and provide professional services for the individual. It could be long-term care, it could be a specific illness, it could be a specific injury. And really, home health care can be a very wide array of services. It can go from the personal care all the way to skilled nursing care can be provided in the home. The next area is residential care communities. These are really known as assisted living communities. These facilities will add a second layer of support. The individual may want to have some type of independent living, but they also may need to be supervised for their medication, supervised for their meals, supervised for different health services as well. The next level of care goes into the nursing homes, and basically this is really your top level of skilled nursing care. The nursing homes provide total supervision, total medication control, different therapies, different rehabilitations, and on-site nursing availability 24/7. So that's really the level of care that's there. And then hospice centers are really centers that are providing for final stages of life. They certainly help with medical care, pain management, emotional support for the individuals during these very difficult days. So how long is really long-term care? Typically, someone that can stay in their home, it usually can be 3 to 5 years. Going into an assisted living facility usually is around 2.5 to 3 years. And typically a nursing home stay is really less than a year, up to about 2.3 years. What does long-term care cost? So want to first caution, these numbers are the national median average from Genworth, who provides long-term care insurance based upon 2024. They can vary widely between whether the facility is in a rural setting or in an urban setting. They can also vary widely from state to state. So it is important to be aware of what the costs would be in an area where you may reside at some point in the future. So typically home health care, which basically has a home health aide coming into the home, is averaging roughly somewhere home health aides around 6,500 per month, and the homemaker services around 6,300 per month. Adult daycare, which is the least expensive option, is averaging close to about 2,200 a month. Assisted living is going to average somewhere in the proximity of about 5,900 a month. And nursing care in a semi-private room will average close to 9,300. In a private room, 10,600 a month, around that price. So in the past, you may have experienced long-term care with some of your relatives. It is becoming more and more common. Think back, who in your family has needed long-term care? Where were they? How was it paid for? Who provided the care? How long did the person need care? Was the care expected or unexpected? And the most important one is, how did that long-term care situation affect the rest of the family? And think about it not only from a financial perspective, but also from an emotional perspective. The caregivers, it can be a very, very huge toll on the actual caregivers for caring for someone in the home that needs long-term care. So who pays for long-term care services? Typically, you first think about that it is paid, through a private or company health insurance. That's the first place that would cover is your own health insurance. Secondly, it goes to your personal assets or family chips in to assist. Third is there's some provisions within Medicare, and I'll explain those in a second. Fourth, which is probably the least attractive, is utilizing Medicaid. And then fifth is having proceeds from a long-term care insurance policy. When you're looking at the actual numbers, typically about 70% of all long-term care costs are covered via Medicaid, public insurance, and Medicare. And about 30% comes from out-of-pocket, private insurance, or other private means occurring. When you're thinking about covering the cost of long-term care, these are some of the things to think about. Is first with medical insurance. Medical insurance will cover the initial skilled acute care only. They do not cover long-term custodial care. So your medical insurance will cover when the first diagnosis immediately happens. However, once it has been determined that this is going to be a long-term situation, that medical insurance will not continue to cover on a regular basis for the actual custodial care. Then you think about your personal income and assets. That may put a significant portion of your retirement savings at risk, and this can cause risk of what you're planning to give to your heirs as an inheritance at some point. But if you're thinking of paying for your long-term care out of your own pocket, basically that's known as self-insuring, it does give you the total freedom to choose your care. What facility do you want to be able to use? What type of room? Do you want a single room versus a semi-private room? And so it gives you a lot more choices, and it may be ideal if you can afford to pay for the care indefinitely. One of the areas that I would certainly recommend, and something that we assist with our clients, is doing a projection via the financial plan of if there is a long-term event, how does that affect you to be able to self-insure? It will very much highlight that for you. But if you are self-insuring, it will require you to liquidate assets at a more frequent basis than you had originally planned. It may impact the ability to pass the assets on to your family. And if finally you do actually run out of money, it will require you to either rely on family members to cover your care or to utilize government programs as your only options. Paying for long-term care via Medicare. So Medicare, it's very limited what Medicare will cover. First, Medicare will pay the cost only after you've had a 3-day hospitalization. So that's number one, that's very key. It will pay for the full cost of skilled nursing care for 20 days. So if you've been in the hospital, coming out of the hospital, going into a facility, it will pay for the skilled nursing care for the first 20 days. From day 21 to day 100, it will pay partial cost of that skilled nursing care, and then Medicare ceases to pay after 100 days in the facility. So that's just very important that it will pay some initially, but for long-term care, it really doesn't continue to pay. And then it also Medicare is limited on how it pays for home health benefits. It typically will pay it very easily when you're in a facility, but there are a lot of other restrictions if you're staying at your home and being cared for in your home. So then we get into the possibility of using Medicaid. So Medicaid is different than Medicare. It is a joint federal-state program that does cover long-term care expenses in a facility. It basically, at this point, covers about 49% of all nursing home cost and about 62% of patients at the current time. However, in order to qualify for Medicaid, it is means-based, which means that you might have limits on where you can also receive your care. There are some facilities that allow Medicaid patients, and there's some facilities that do not. So that's an important question as you are contemplating that. In order to be eligible for Medicaid, there are also some very specific rules. Every state has its own eligibility criteria. In most states, the individual's income must be less than the cost of care to truly prove that they cannot afford the care. And in some states, there's also an income cap. For instance, in Texas, the income cap is $35,000 if you're single, $70,000 if you're married. And in most states, they also have an asset limit of $2,000 or less in order to qualify for Medicaid, which could be problematic if you have other assets. Some assets are not counted. For instance, if your spouse is still living, your primary residence is not counted. However, they may be able, once your spouse passes away, they may be able to recoup some of the value of that house. Also, they typically will allow you to leave one car that is not liquidated, and some of your household and personal belongings do not count. Typically, term life insurance is not included, and any type of burial plots or funeral expenses that you have already prepaid as well. So one solution is to do Medicaid planning. And this is basically what the strategy involves is using assets that count against Medicaid eligibility, liquid assets, cash assets, etc., to purchase assets that don't count against Medicaid eligibility, small-term life insurance policy, etc. Also, transferring assets into an irrevocable trust, can protect assets from Medicaid, and then giving assets away to family members or anyone up to the annual gift exclusion. However, I do want to point out that when you are transferring assets in order to do Medicaid planning, they do have a 5-year look back, which means that if they look back, if you need it to qualify for Medicaid sooner than 5 years, they would actually claw those assets back, and you would not be eligible for Medicaid in that time frame. So that's something to just be aware of, that Medicaid planning needs to really occur 5 years before you would need Medicaid. And then, and that's what I mean by the distributing or protecting your assets in advance may help you there. So income is calculated in retirement based upon all of your sources. So your income includes any interest, dividends, capital gains, Social Security, IRA distributions. All of that is included in your income. Any rental income that you might have, any income from an LLC or a business entity, everything is included in the income calculation. So Medicaid planning, every strategy that is in our financial world has pros and cons. So Medicaid planning, the benefits are, qualifying for Medicaid as soon as you possibly can. Typically, you're able to adjust assets so that there is assets left to protect a healthy spouse. And then you're also able to change ownership in assets so that your loved ones would conceivably get an inheritance. However, there are also some negative components for it as well. Probably the one that is the most problematic is sometimes Medicaid planning is looked at as not being really an ethical solution, that it has some moral implications to it. Also, it requires you to give up rights of ownership to your assets. And a lot of people they want to still control their assets. And third, the Medicaid laws are very complex. If you are doing Medicaid planning, we absolutely advise you to work very, very closely with an elder law attorney to make sure that things are done absolutely the correct way so that you don't have a surprise at the end of the Medicaid planning accordingly. And basically, an example of Medicaid planning is that you gift ownership of your house to your son. The negative part is that the cost basis also transfers to the son. So the fair market value of the house is $400,000. Obviously, the average cost of nursing home care in your area may be $4,000 a month. Your ineligibility period is 100 months. So you basically have eliminated some of that cost that conceivably would have come from you selling the house, and you would be able to, provided you had also transferred out other assets as well, be able to qualify for Medicaid. But it may not be. Some of these strategies may be one way to think about for yourself, but may not be as advantageous for your children. So again, you have to look at the pros and cons of every one that it affects. So a second strategy is called a reverse mortgage. We tend to think of a reverse mortgage, though, as your last option. Typically, what a reverse mortgage does is it allows you to live in your home for as long as you're able. There are no mortgage payments that are required. Basically, it is a loan that is taken out, and it is not required to be repaid until you vacate the home. Now, the negative part to this type of a situation is that it typically has very high fees, and some hidden costs that are repaid when you vacate the house. So it's something that, again, I usually think of a reverse mortgage as your only option. It's the last resort type of thing of getting funds. Then you look at long-term care insurance. So why would you pay for long-term care insurance? Typically, the benefits are that it protects your retirement savings. It also reduces the pressure of a family member or spouse having to cover the cost of the care, which in a financial manner. You also typically will obtain care planning expertise. Most long-term care providers will also have counselors that are there to assist the caregivers with resources and other information regarding care. And it also usually preserves your independence a little bit longer. Now, in terms of thinking about when do you get long-term care, long-term care is expensive. It is usually your premiums are based upon typically your age and your health when you apply. So it is advantageous to get it when you're young and healthy. However, if you get it too young, you're going to be paying premiums a really long time. So you want to think about specific ages that typically are red flags for premiums going up. Usually in your 50s is a very optimal age to be looking at long-term care insurance. Typically at age 60, the premiums will go up. That's usually a big jump for premiums. And before age 50, it just means that you're paying premiums for a very long time. But it would be cheaper, that's for sure. So it's definitely, having health issues can certainly make your premiums go up. It can also preclude you from getting the insurance altogether. Also, when you're thinking about long-term care insurance, the reason that you would want to do it is it helps protect your assets. The cost of care is going to continue to go up. And so basically you want to prevent, if at all possible, you want to prevent the need for reducing and liquidating your assets. So typically this is showing an average of about a 3.95% average annual rate of inflation. And it was over, I think, the last 35 years. And it basically is it's showing, what does inflation do to a pool of money that is $275,000 today? Well, in 10 years, that's going to cost $406,000. In 20 years, $598,000, and in 30 years, $882,000. So long-term care insurance possibly can help mitigate some of those cost increases. So how does long-term care insurance actually work? Basically, first of all, you have to be deemed that you are declared needing long-term care. And that requires a health care provider to certify that you cannot perform 2 of the 6 activities of daily living, or that you need continual supervision due to a cognitive impairment. Most long-term care insurance policies today will pay benefits for services you receive in your home, in an assisted living facility, or a nursing home. This is an important factor to look at as you are looking at different policies to make sure that you do have care can be provided in all of the different locations. It gives you more flexibility in your choices. Also, because typically the longer you can stay out of a nursing home, the longer you will probably live in a higher quality of life. And so when you're thinking of your stay-at-home benefits, You do want to make sure that the policy will be including things like household tasks, cleaning and meal preparation, bathing, dressing, but you also may need the actual services of an actual visiting nurse or a home health aide. You may need certain special equipment. You may need home modifications. So certain policies will cover some of these certain policies. And so, again, the more services it covers, probably the more expensive your coverage may be. So that's an important factor as well, to be able to be aware of accordingly. Then you want to think about a long-term care, insurance policy isn't necessarily going to replace the informal care that's given by family members. It gives, though, extra support so that the family members aren't carrying the full load on their own shoulders. It gives extra support from both a financial standpoint, but more importantly, an emotional standpoint. As I said earlier, the caregiver is really, it affects the caregiver in a large way emotionally to be caring for someone. Now, long-term care is an important part of your entire plan. Think about everything else that you insure in your life. You have insurance for your car. You have insurance for your house. A lot of people have life insurance, or especially in their earlier years. When you were working or when you are working, you have disability insurance to protect your salary. So that's the normal progression. Is with the statistics, the probability so high that you or your spouse will probably need long-term care, then why not have also a protection for long-term care? Long-term care insurance, the things that you want to think about, and these are the variables in most policies that you need to be thinking about. First, what is the benefit amount that's payable? Typically, they will usually quote an annual benefit, but sometimes they quote a daily benefit. So different policies can be different, but that's important. If it's a daily benefit, that might be different than a monthly benefit. What is the benefit period? Sometimes it's a 3-year period, sometimes it's a 5-year period. Typically, you will also find that policies will have a total benefit, and therefore, if you only need a partial amount early on in the early on months, it may last for longer than the benefit period specified in the policy because you're starting out taking a smaller amount. Most policies will also have an elimination period. Typically, it's anywhere from 90 to 180 days. If you remember, back before we said Medicare would pay the first 20 days of your skilled nursing home care, and then they would pay basically partial for the 21 through the 100 days. So keep that in mind that you will also have some Medicare supplements from there, but there will be a waiting period before your long-term care insurance actually starts. Be very aware within the policy, where are the locations that they are willing to cover? And then also, is there an inflation protection located in the policy? Because costs today, as we saw just a little bit ago, are vastly different than what they will be in 10, 20, 30 years from now when you actually may need the care. So that's also an important factor, is looking at the inflation protection. Why should you consider long-term care? Really, you want to start, that's just like anything else that you plan for in life, is the earlier you plan for something that may happen, the better prepared you are. Not saying that you need to actually buy the long-term care policy at this point, but planning for it can be very advantageous. Also, the older you get, the more expensive the premium is going to be. And then if your health changes, you may not actually qualify for the insurance. Now, there are also some alternatives to self-insuring. You can use liquid cash to purchase totally prepaid long-term care policies. Typically, these are things that would leverage. They typically will allow you to pay one time. The policy is totally paid up. It will actually compound the cash. So, for instance, if you put a $100,000 purchase into a prepaid long-term care policy, it will pay out multiple times that as a payment for the long-term care. And if you never need the long-term care, well, it then pays back to your estate as well. So there's those type of programs that are out there. And when you're thinking of other insurance options to explore, I do want to say again, we do not sell insurance. We are not brokers of insurance, but we are knowledgeable on the different types of programs that are out there. Every single type of program usually has the ultimate benefit, and it really comes down to what is your true goal. So sometimes it may be, well, I want a money back guarantee no matter what. If I don't ever use the coverage, then I want to make sure I get my money back. Or maybe it's, I want to have also a death benefit attached to this particular policy. So if I never need the long-term care, then there's a death benefit that's going to go to my heirs, or it covers the actual long-term care benefits. In addition, there are quite a number of policies that you can get that have either a single pay or a limited amount of payments, maybe a 10-year pay. There are also policies that can be a joint policy for both you and your spouse, so that, because we never know who's going to need the care first, and therefore the policy can cover both spouses as well. So I guess really what I want to say in a big picture is there are lots of different choices, but most importantly is having the conversation and thinking through, what are your ultimate goals? What do you want to have happen if you do have the long-term care insurance? And looking at, again, the single premium policy, we talked a little bit at there. It's one time the premium happens. The premiums can never increase. There is a choice of care setting. It also does have some international benefits typically. So that's an important factor as well if you are thinking about living overseas. So again, coming back to begin planning today, you may not actually put in place everything today, but at least start the planning. Look at what are your options. Look to see what does it do to your portfolio if you self-insure and you do have a long-term care need. Look at what the cost of the insurance is. See what the cost benefit is. Hypothetically, we would run the numbers that shows, okay, this is if you self-insure and you have a need, but this is the cost that you're going to be paying for your lifetime if you don't have a need. What does that also do to your entire portfolio? So you need to look at it several different ways before you make the decision on what is right for you and your family. Basically, next steps, first of all, start the planning process. That's where we can come in and help assist with that with you. We do, most of you, if you have not been through our financial planning process, we certainly encourage you to do that. We believe that is the core of what we do. But also then we build out a strategy showing long-term care. We show needing a long-term care. We showed what the cost is if you did actually do a policy, and we show what the benefits could be to see if it really makes a difference in your situation. Once you've gone through the planning process and you've really got a good feel for what this may do, then talking with a licensed insurance agent is the next step. Again, it is very important when you're thinking of an insurance agent to talk with someone who represents multiple carriers. You want to have an independent agent that can represent multiple carriers. Also, depending on your specific health situation, if you've got a really good insurance broker that represents lots of different carriers, then you absolutely have the ability to, they would know which carrier, quote unquote, to shop your health situation with that has the best opportunity for getting you approved. And then when you actually consider the funding solution, take another look to make sure that it does include all of the features that you need. So a couple of questions that have come in as well. The presentation available after the webinar. We actually do post our webinars on our website, so you will be able to go back, and we will send you the link via email as well. Do we have a list of reputable long-term care insurance providers? We do. We do have people that we work with, and we're more than happy to give you names accordingly. And then let's see. So, yes, good, very good question. Someone asked, a lot of times an insurance agent has one motivation to just sell you the policy. That is why we always say start with the planning option to really understand what are your options and what does it look like for you, because you can go to the insurance agent much more informed, and then before you sign the contract, we actually recommend bringing the proposal back to us. We implement the actual numbers into the plan and look to see, okay, what are the choices and what would be the best alternative accordingly. So we absolutely would work with that as well. And then, so very good question on the long-term health of an insurance company. A lot has been discussed in this area through the years. There have been some insurance companies that when long-term care first started to be a product, many of the insurance companies did not foresee how expensive care was going to become, and they did not foresee how many people would actually want to buy the insurance. So in the early years, they actually sold policies that really kind of had an open-ended situation. They allowed for the premiums to go up. They allowed for, you could, if at points in the future, they may give you the option of either a premium going up or reducing coverage. And fast forward to today, clients that are in their 70s and 80s that bought these policies when they were in their 40s or 50s are being hit with quite a large proposed increase in their premiums. The policies today are very different than what they were back then. You typically can have policies today that give you a few more guarantees. Now, you may not get the open-ended total care. You may not get quite as much of a multiple, but they typically will give you choices of a fixed premium, and this is what your fixed benefit is, and they won't come back saying, oh, we're going to raise it. So there is a difference in because now the insurance companies realize what their commitment is, and they are making adjustments accordingly. In terms of typical monthly cost, it varies widely for long-term care insurance. It really is dependent on your age and what level of benefit that you want. It varies widely. I wouldn't even want to put something out there that does, but it also typically does have a very good internal rate of return, meaning that if you needed the care, it is going to pay for itself relatively quickly from that standpoint. But it can vary quite a bit accordingly. And then if you are 65 or plus, is it still good to get long-term care insurance? So it is a lot more expensive once you've gone over 60 or once you've gone over 65. The cost does start to become a little bit prohibitive. But again, what we do is let's look at it from a standpoint of what is the cost, what is the benefit, and then look to compare it to if you self-fund it, what would that option be as well? So it's really looking at it to make it a numbers decision, not an emotional decision. But it does become more expensive at that age 60, at that age 65, and so forth. It does become a little bit more expensive. Then in terms of As you're thinking about long-term care, do explore services and costs both in the area you currently live or where you might want to move. As you get closer and closer to the ages of needing care, a lot of people will move closer to where their children are. And that may be a more expensive area or it may be a less expensive area. I do encourage you, if you think that at some point in time, whether you have long-term care insurance or not, but if you ever think that you may move into a facility, start taking a tour of those facilities very early on. Do not wait until the time it is for you to move in. Do it now while you're healthy, while you're vibrant, while you are engaged, because you will start very quickly assess which facility you like and which facility you don't like. And that gives your family a really good insight. So if they have to make a decision later on, you've already toured it. They already know which ones that you liked and which ones you didn't. And so it does help considerably, and especially if you're thinking of moving closer to where your children are. Take the time to go and visit the facilities, get a feel for them. It's almost like college. They all have different personalities, and they all have things that are pluses and minuses, and you would assess what's important to you. As you're thinking about long-term care, we've talked about finances. Do the financial plan. Look to see how it affects you personally. Talk to your family about your plans. What support do you need from them? What support are you expecting from them? And what are your worries and concerns? The more you can talk about this in advance, the better it is in the long run. Do you have a desire to live in your home as long as you possibly can? Then communicate that as well. And then we talked about comparing options. And then also importantly, this goes along with estate planning, but make sure that your healthcare directives are prepared, they're up to date, that there is a copy with your family member, there's a copy with your doctor. Make sure that your healthcare wishes are in place to be carried out as well. And so just to circle back, we absolutely, would welcome the opportunity to be able to sit down with you and really discuss your various options, discuss the entire situation of long-term care. It is complicated. And the older you get, the more complicated it is. So as early as you can to kind of be starting to think about this and think about how does it affect you long-term. That's a very useful tool to do. And we welcome and would like to have the opportunity to meet with you one-on-one and to actually do that type of a financial session. Again, these are our locations. And in addition, we have a QR code that's here on the screen. You can actually put your phone up to the QR code that's on the screen right now, and it will take you in with your photo app, and it will take you directly to our website that allows you to input the information to actually contact you to make an appointment accordingly. So we do welcome that as well. We do thank you for your time today and look forward to talking to you in the future.